can we know much about Kevin Warsh? Because so many people in the president's circle really make a huge shift in order to endear themselves to Donald Trump. So, I mean, it's unclear whether or not he's still an inflation hawk, isn't it?
Yes, I think it is. I think the short answer to your question is yes. It's hard to know what will actually happen when Kevin Warsh is confirmed and in the seat. Kevin Warsh does have experience as a governor and knows all too well the challenges of engineering and forging a consensus amongst 19 opinionated independent thinkers. And he will have to confront that still. So, he sort of has to sort of shift his position, as you note, to get the job. Once in his seat, he's going to have to contend with the committee like any other Fed chair, and look at the data and deal with different opinions. And, he faces the uncomfortable situation of, if you don't have a majority of the committee favoring lower rates, are you going to dissent from your own policy as Fed chair? That would be unprecedented. Or are you going to disappoint the president? That may be the difficult situation he finds himself in.
And this, I just am reading a message from Joe Brusuelas at RSM. He writes in to remind me that Kevin Warsh had some pretty radical views on balance sheet reduction. And I wonder if he maintains those views, especially considering he was active on the Fed, 20 years ago when the economy was much smaller. Maybe a larger balance sheet is necessary to deal with a $35 trillion economy.
Yeah, I mean, he was a balance sheet hawk. I mean, that was one of his core positions, that QE did not sit right with him. He was very uncomfortable with it, even in the depths of the global financial crisis. So, I think it seems like he would be amongst the four candidates that were under consideration, the less likely to be interventionist on the balance sheet. And in any case, any kind of shift in balance sheet policy will also require that the New York Fed president is with you, that the committee is with you. So we don't really know what his position will be going forward. And whether he will be willing to use the levers of the balance sheet to try to engineer lower rates. But more importantly, would he even be able to, is the question. And I think that in any scenario, whether Powell leaves or stays, whether Waller leaves or stays, and whether there's a bigger rotation or a smaller rotation in personnel, it's going to take some time for Kevin Warsh to affect a plan of action that tries to engineer lower rates, particularly given the current state of the data. Of course, if the labor market were to wobble and the economy looked shaky, you'd have a lot of support for lower rates and possible balance sheet intervention, but that's not where we are right now. So we don't know where we'll be in June when he takes over. So the data could, help his case, or it could get in his way.
I remind viewers that you spent many years at the Fed after doing your PhD at UT, and I wonder what is your take on where we are right now? I mean, do we need lower rates? How does the labor market look to you? The Fed seemed pretty sanguine about that. And how does inflation look to you, Julia?
Yeah, I mean, we just got a statement from Governor Waller on the labor market, kind of saying, we had basically, once we get the benchmark, no job growth in 2025. Does that look like a healthy labor market to you? He used some spicy language. But I think, it's not clear that we're out of the woods on either side of their mandate. I think a pause is perfectly sensible after the 3 rate cuts, given the constellation of data, very strong GDP tracking, some signs of stabilization in the labor market. So the unemployment rate ticked lower. It's drifted higher over the year. ADP tells us that we're seeing modest positive private sector job growth. Indeed, job postings have sort of stabilized and drifted a bit higher. So there are some indications that the labor market may not be on the same downward trajectory it was through most of last year. So pausing and gathering more information, I think, is perfectly sensible. In fact, I think absent some of the politicization, it would have been a unanimous decision because it's not that controversial after 3 cuts to take a pause and see how the data pans out.
Right. And
I don't think that. Go ahead.
I mean, and really, we're down even more than that if you look since September of 24, right? I wonder about inflation, and I'm always worried about it. I worry about everything. As a journalist, I feel like it's partly my job. But we're getting supposedly big tax reductions, 15 to 20% higher than, refunds, higher than we had a year before. We have tax reductions, right, especially for the wealthy who do a lot of the spending. President Trump wants to cut stimmy checks for the masses as well. And 3% inflation, I also wonder, Julia, that seems a lot worse after 9%, right? So, right. Is there any chance that we can average our way down to the Fed's target, or is that just we just blown past that?
No, I think it's going to take some time to get to 2%, even under good scenarios. You are very correctly pointing out that we've got some fiscal expansion, and that fiscal expansion could be inflationary at a micro level. For example, we hear that automakers may try to use that tax refund season to push through some of those higher costs they've been facing because of tariffs. We'll see how that plays out, but we could see some transmission from that fiscal support or a fiscal expansion into inflation. That's entirely possible, and I think the risks are certainly tilted in that direction. If you've got more fiscal easing, you need less monetary easing.